So we're in a competitive market, and I'm here with Graham Setliff of First Savings, and we are just trying to share some information for buyers out there in the market. One of the first things I want to ask you is the difference between getting pre-qualified versus pre-approved. You can explain that.
That's a very good question, because a lot of times people don't understand that distinction. Pre-qualification is basically an informal review of someone's finances. I mean, making sense. You can say that their finances make sense and that they can do it. A pre-approval is to take things a little bit deeper, to get specific information on the buyer, and also review their financial documents, and then even run that scenario through industry automated software and underwriting to make sure that you have everything in line and it's more of an ironclad way to lend and you've got it approved and on the right path process.
And some people don't want to go through that application because they are afraid that it's going to hurt their credit. But what's the rule in terms of how long and how many ticks can you have in a certain time period?
Yeah, that's a good question. You can have, the first time a lender does a full credit pull, it usually will affect your credit score 3 or 4 points.
Okay.
Any subsequent pulls have no effect on credit whatsoever.
For how long?
For 60 days.
60 days.
And there is always, people are hesitant to have their credit pulled, but I always look at it as a way to make sure that everything's in place. Because sometimes people are just not aware of things that are on their credit report.
Yeah.
And you don't want to be down to the down to the wire on that.
No.
Because that's not where you want to be.
And I think sometimes people are a little bit afraid. It's almost like, oh wait, my tooth hurts, but I don't want to go to the dentist yet. They need to get to be comfortable with their finances when they're buying a home. And so it is the first key important step of getting pre-approved through a lender. The difference between local lenders and non-local lenders and what that means for the buyers.
In terms of the lending thing, I mean, when you look at what a local lender such as myself and First Savings bring to the table, everybody goes, oh, you have certain local market knowledge. I think it's more than that. It's more focus. You can go to a large institution that may dabble in mortgages. They may do car loans. They may do student loans. They may open up checking and savings accounts for you. They have multifaceted business approaches, and a mortgage is one of those things that they do, and they may do it well. But we are experts at it because that is our only line of work. Mm-hmm. And we're only here in the DC, Virginia, and Maryland area. That's it. That's the only place that we do business.
So with that, if you can just help explain some of the products that are out there. Mm-hmm. I know First Savings does a lot of other products, including bridge loans, that you can talk about in terms of what are some of the options that are out there for buyers.
Right. Well, we understand, being a local lender, that how competitive the marketplace is. So we have a wide variety of products. We have low down, very low down jumbo options with as low as 5% down. We have a lot of creative products that can expand debt to income ratios. We also have, as we mentioned, some things such as bridge financing, which really is a big play right now in terms of being able to act on that new home before you've sold your current home.
Which most lenders and most people think it's non-existent in this world anymore. But First Savings has done it for our clients time and time again. Yeah. And there's such, being a listing agent, and a listing team, there's such credibility with certain lenders, and the ones that might be a nightmare and delay things versus the ones that aren't. And so in the 15 years we've been working together, it's been a slam dunk every time. So thank you for making sure the process is smooth and getting our buyers to closing. In a circumstance if it would appraise low on a property, what are the options? Because most people think, oh, it appraised $50,000 less, I have to bring $50,000 to the table. But that's not the case.
Yeah, then that's a very good point, because we use local appraisers, and they make a massive difference in our business because they understand the market and they understand the trends, and that's very, very important. You can never give them enough credit for the work that they do, because they work very hard to do that. But not all properties are always going to appraise just because of the comps in a certain area. But there are ways to structure the financing, because remember that the financing is based on the lower of the sales price or the appraised value. And even if there's a shortage, you can do some tweaks to the financing and then still get that buyer in the home on time. And it's just a matter of restructuring certain things with the financing. So if somebody's putting 20% down and now they have 10% equity, well, maybe they do a 10% down type of product in the end result. And that has come through time and time again.
Now, there's also a circumstance. I remember we had a client that was very concerned if it didn't appraise, what would that mean? How much money would they have to bring to the table? And it was like, there was I think it equated to like $4,000 in order to buy down. Can you explain that?
Yeah, and I've had a lot of cases go this way. Let's say that somebody paid a certain amount over the list price and the appraisal lands pretty close but not all the way there. And then probably that case, mortgage insurance may have been triggered on that loan because there wasn't 20% equity based on that appraised value. But all we did was just buy out the mortgage insurance with just an upfront premium, which you can pay as a closing cost at settlement, or in most cases, I'll just finance it in the loan amount.
Can you just share if a buyer or an agent is calling you and saying, hey, can we waive financing here? What's your advice?
Well, I mean, I'd say in a perfect world, the financing contingencies in the contract for a reason. But we don't work in a perfect world, and we work in a very competitive world, and we're in a very competitive real estate market. So I would say that it's not that I think it's something that I would absolutely recommend every time, but I think the reality is you have to do it, and that means preparation up front in terms of the buyer's financing. If you have more of their information, you've gone through more options with them, and you've had a chance to dig into what they've got going on, you're just setting yourself up for a much better outcome.
Yeah.
There's not all the what ifs.
And I will tell our buyers, if you call Graham and he tells you it's okay, assuming that you've given him all the information that he needs, right? Because that's one thing is you're relying on these buyers to fill out the application and give you all the documentation that you need to really see the whole picture of their financials.
Correct.
And if you have everything, then you can with your team here is amazing to be able to say yes,
Right.
It'll be a slam dunk, or we're tight, we can't go above this price, but we're good. So that's a nice security to be able to waive that financing and not put our buyers at risk. Yeah, I would say that's one great piece of advice of getting things done on the sooner side, getting all your financials in, because there's usually a time or two or three of like, hey, we need this, this, and that too. So allowing enough time. I've heard a lot of buyers say, oh, my lender, we need 45 days to close. I'm like, wait, what? No, you don't need 45 days to close. Some lenders do, but what's your timing right now for closing, from contract to close?
Well, it depends on the financing, but I mean, we routinely do things, 2 to 3 weeks. And that is what we try to do, because that will put that buyer in a very successful position.
Yeah.
Typically. I'd say if somebody's paying cash and they want to settle tomorrow, well, I can't do anything about that.
Right.
But other than that, I think that it's speed wins transactions.
So we actually just won one last week where there was 21 offers. And because First Savings was able to do it in, I think it was 2.5 weeks we had, it was chosen over other contracts at a higher price. I know you have helped us win contracts, so thank you.
Thank
and
you.
being able to, you've worked on Sunday afternoons for us, like you're there, so we appreciate your loyalty and to our clients.
Thank you. Those of us that are do business work a lot of hours.
Yes, we do. But we love it because it's very rewarding to help people and getting people into the right home.